Things are heating up in markets and in the tech world. Apple is leaving China. Federal Reserve is investigating FTX and Sam Bankman-Fried. And Cardano is seeing major announcements, positive developments, despite being in one of the longest crypto winters ever. So we got a lot to unpack. Let's start off with crypto news. We're seeing with Cardano right now that there's been a surge in smart contracts on the ADA blockchain in 2022. At the beginning of 2022, there were 958 smart contracts deployed on the Cardano ecosystem. Since then, we have seen the number increase by over 350% to 4,150 smart contracts. So despite anything going on in the market, and what everyone is saying that projects are dead, there's nothing going on, we're consistently seeing that developers are building on Cardano's ecosystem and building on the Cardano blockchain. So this is a very bullish sign if you are a Cardano investor. Next thing is that we're seeing with Sam Bankman-Fried and FTX. Right now, the Fed is investigating Sam Bankman-Fried for possible market manipulation with UST and Luna, when we saw the whole entire Luna collapse earlier in 2022. So many people in the crypto space lost billions of dollars when Terra Luna's project went from over $100 billion market cap down to zero in a matter of days. And now the Fed is investigating Sam Bankman-Fried's FTX as well as Alameda to see if they played a part and a role in this massive collapse. According to recent announcements, it's still unclear whether the prosecutors have determined if there was any wrongdoing from FTX, Sam Bankman-Fried, and Alameda, but they are going to be doing an investigation to see if they did have any role, if they did profit and benefit in any way from doing this, because there were reports when Terra Luna collapsed that many of the sell orders for UST came from Alameda Research, and that they also placed a short position on Luna's price, betting that it would fall. So they're going to be doing a lot of research into this, because if Alameda caused UST to collapse and then they put a short position to profit off of Luna collapsing, that's market manipulation, and that's a big problem. So they're going to continue this investigation and see what happens with that. But now that we are in December and the year is quickly ending, tax season is going to come faster than you think. And today's channel partner is the #1 crypto tax software in the US called Binocs. All you have to do with this platform is integrate your crypto data across platforms, and they do the rest. They also allow you to track your portfolio. And some of the coolest features about Binocs that I find most interesting are, first, that you don't need any KYC in order to create an account. In addition to this, it's integrated on over 100 different exchanges, the top ones like Binance, Coinbase, KuCoin, all the major ones, in over 40 different chains. It supports multiple types of transactions, trades like staking, airdrops, mining, lending, borrowing, everything all across the board, so you don't have to worry about tracking all of those. And it also allows you to easily track your portfolio that is on different exchanges, multiple chains, does everything all in one place. Not only this, but they also provide detailed capital gain income reports for everything you need when doing your taxes. Moving forward into the next few months and years, they have big plans of releasing new features as well, like an NFT portfolio tracker, staking portfolio tracker, and derivatives position tracking across all centralized and decentralized exchanges. So this platform is essential if you are in the crypto space. If you trade crypto at all, if you do any sort of staking, if you've ever received an airdrop, this platform is essential. You can use my link in the description and get 30% off if you are one of the first 100 people to use the link. So make sure you go ahead, take advantage of that opportunity before everyone else does. Only the first 100 people who use the link are going to get 30% off when using Binocs. But in the tech world, we've also seen some pretty big developments take place, as well as Elon Musk's Twitter is being sued for disproportionately firing female employees. So right now there's a class action lawsuit that when Twitter was taken over by Elon Musk, the company laid off 57% of its female employees versus 47% of its male employees. And to me, this doesn't seem like a major difference, 57% versus 47%. But according to a recent class action lawsuit filed by two female employees, former female employees from Twitter, they said that this was disproportionately benefiting and males and disproportionately targeting females. So we will see what happens here. But one thing you have to remember with Twitter is as soon as Elon Musk came in, he took over Twitter. Twitter went from over 7,500 employees down to 2,500. Not all of these 5,000 people that left were fired. Not all of them were forced to leave. Many of these people resigned simply because they didn't want to work there anymore. They didn't want to meet the rigorous demands that Elon Musk was putting in place for their work schedule. So we'll see what happens here, but let me know in the comments. Do you think firing 57% female employees versus 47% male employees is disproportionate? Or do you think that is just based on the numbers and the people that are working at the company? Because it's proven, it's a fact that more people are working in the tech space. More of them are male, especially coders and developers, and that's a lot of these positions at Twitter. Moving on, let's talk a little bit about what's been going on with Carvana. So, Carvana is the largest online car retailer in the world, one of the largest. And Carvana stock has been collapsing as there have been more bankruptcy fears emerging over the last few weeks. Recently, Wedbush published a $1 price target for Carvana. They say it's overvalued and they're warning of signs of bankruptcy. And the reason for this is that Carvana recently, they have a total of around $5 or $6 billion in liabilities and that they have had from lenders. And right now, Carvana's 10 biggest lenders, holding around $4 billion of the company's unsecured debt, have made a 3-month pact to act together in the case of a restructuring because they believe that Carvana is going to try to take out more loans, that they could potentially go bankrupt. And the 10 biggest lenders for Carvana said that they're going to be working together, making decisions together to benefit them moving forward despite what happens with Carvana. So as a result of this, we've seen Carvana's stock price absolutely collapse. And according to speakers and representatives from the company, they said that Carvana is solely focused on executing on their plan to profitability, which was outlined in their Q3 shareholder letter. They say nothing which has happened with these creditors changes anything. They said this amount that they've owed is obvious. It's been on their financial balance sheets, and moving forward, their number one goal and what they are trying to do is execute on their plan to profitability that was previously outlined. So I don't personally own Carvana stock. I have looked at it previously, but let me know your thoughts on that as well. And last few things I want to go over are going to be with some overall economic data as well as Robinhood and Apple. So recently, we've seen that there's been about 270,000 homebuyers who bought houses during the beginning of 2022 who now already owe more on their house than it is worth. And this is because of skyrocketing interest rates and the whole entire housing market seeing drop in prices. So among the 450,000 total underwater borrowers, people who have mortgages in the third quarter, I said nearly 60% of these people who are underwater came from just the purchases in early 2022. So a lot of this has to do with simply the fact that interest rates have gone up, the economy is starting to struggle, and we've seen that house prices are not increasing at the same rate that they used to. So many people that bought at the beginning of the year when prices of houses were very high and rates were not as high as they are now, but these people are underwater and they're in the red. So we'll keep an eye out on that, especially if you're trying to get into the housing market, you're trying to get into properties. Things are starting to come down. It's better to get in, obviously when interest rates are lower, especially if you're getting mortgages, but we'll keep an eye out on that. And now let's talk a little bit about what's been going on with Robinhood. So Robinhood, symbol HOOD, just recently launched an IRA account with a 1% match on customer contributions. And they are labeling this as the first ever match paid to retail IRA customers. They say that they have over 12 million active users, they have over 23 million funded accounts, and ultimately this is a way for gig economy workers and younger investors who potentially don't have a job that matches their retirement contributions. This offers them a way to match some contributions. The thing that I see with Robinhood is that they've seen a massive decline in total trading volume. A lot of people lost trust in them after GameStop and AMC. And we've also seen simply with crypto making up a large portion of their trading volume with crypto winter. Now a lot of people aren't using crypto. So we're seeing that Robinhood is trying to expand their offerings, get into stuff that is more secure product offerings with this IRA account, and I think it's a good move by them. I don't know how many people will actually want to use it, but seeing that Robinhood does have around 12 to 13 million active monthly users and 23 million funded accounts, there's definitely a huge opportunity there for them to profit as well as help people who want to increase their retirement account contributions. And last thing is going to be with Tim Cook and Apple. Apple CEO Tim Cook recently said that Apple will be using chips built at the U.S. factory in Arizona. And he said that over the coming months, Apple is going to be phasing out of China, and over the coming years, they want to leave China and have less reliance on China entirely. So right now, when you look at Apple's reliance on China for supply chain, for producing phones and all of their products, right now over 35% of factories supplying Apple products are located in China. Some estimates say that it could take up to a decade and cost tens of billions of dollars for Apple to get out of China, which is probably an underestimate in my opinion. I think it's going to take hundreds of billions of dollars over the coming years, because not only is it cheaper to produce products in China, but also setting up new factories elsewhere costs billions of dollars as well. So this is going to be a massive undertaking that is going to take tens of years. But Apple has officially announced that they do want to be leaving China, and they don't want to have to rely on supply chain in China. They don't want to have to rely on factories in China, and they want to be building their products elsewhere.